Welcome back. I'm Pratap here. In this video, let us have top-down analysis for Bank Nifty from monthly time frame until 5 minutes time frame based on Neo Stock Software Supply Demand Zone chain. And next week's analysis will be continued based on the analysis we are doing in this video. Even before that, an announcement, please, if this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our Neo Stock YouTube channel. I kept all these videos in a playlist, supply demand zone price action course, at our YouTube channel. Even I have provided the link to this playlist in this YouTube video description. You click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into our Bank Nifty analysis based on top-down analysis. So let's start with monthly time frame. So in monthly time frame, already during last week we have generated this zone, drop, 3 base candles and rally. So same zone will be continued. See here, the 1/8/2023 is the leg in, 3 base candles. So this is 1/8/2023. Now let us draw the monthly zone. This is the monthly demand zone. Let me add a label also here. This is a normal demand zone. So monthly and weekly, up to weekly, whether it is normal or high liquidity, it doesn't make much difference for our analysis. But daily onwards, definitely some differences we can see, we can experience. So now I am changing to weekly time frame. And one more thing, this is an all-time high demand zone because it doesn't have any supply zone. And another important point is this monthly demand zone is having monthly EMA confluence. In case if Nifty is come down to 43,000 level, the overextension, monthly overextension will be completed. So it is almost completed because the prices are in the monthly zone. And moreover, it is having monthly EMA confluence. Now let's get into weekly zones. And let us generate the supply demand zone chain for weekly time frame. So I am changing the time frame to weekly and I am generating the supply demand zone chain for weekly time frame. Okay, now the zones are ready. The most recent zone is we have a leg-in candle on 26th December and we have 2 base candles. Let us draw. 26th December. This is the supply zone. Sorry, this is not the demand zone. This is the supply zone. 26th December, 2 base candles. So this is a rally base drop. So we have to select the higher wick of the leg candle, leg in. Now let me change the color to weekly supply zone. And let me label it as a weekly supply zone. Okay, now let us draw the weekly demand zone. This is a high liquidity demand zone, weekly demand zone. So when it was created on 30/10/2023, 3 base candles. So 30/10/2023. So this is the leg candle. These 3 are base candles and this is a rally candle. So let me draw the weekly demand zone Let me change the color to weekly demand zone color, and also let us mark this is weekly demand zone. Okay, so weekly levels are identified. So this is going to be the range for the weekly. Already this week prices were just near the weekly demand zone, and also they are inside the monthly demand zone. Previously weekly demand zone just tested this zone at the higher wick of this zone few weeks back, that is on January. From January, this is the move Nifty has given, Bank Nifty has given. Okay, now let's go to the daily and generate the daily zones. So selecting the daily time frame, and now we are generating daily supply demand zone chain for Bank Nifty. Okay, daily chain is ready. And what is the nearest demand zone, daily demand zone? The fifth one. This is the nearest daily demand zone. It is already tested once, but let us draw this zone. Below that we have a high liquidity zone, which is a fresh zone. In case if this daily demand zone is violated, the next one definitely will give good success rate. The reason is this is a high liquidity zone and a fresh zone. So when this daily zone is created, this is the most recent daily demand zone to the current price. So 28 March, one base candle. Sorry, 28 February, one base candle. This is demand zone, 28 February. Sorry, we are at weekly time frame. I'm sorry for my mistake. Let me change it to daily time frame. So this is 28 February. We have a base candle, and this zone is tested during this week. There were good rejections from this zone earlier, because last week we have seen in the daily videos we discussed several times prices entered into the fine-tuned area inside the zone. The lesson 16 concepts worked very well inside this zone. So this is a daily demand zone. See, if it is a high liquidity zones, I will add a HLQ keyword. If I am not adding the HLQ, that means it is a normal demand zone. So last week, Bank Nifty has given you multiple opportunities. This is the first opportunity, this is the second opportunity, this is the third, and this is the fourth from this daily demand zone, and gave you some good intraday returns. But how you captured this, they're all depending on the high liquidity zones inside the demand zone and also fine-tuned demand zones inside. See, this is a fine-tuned area. This is another fine-tuned area. We have seen over 600 points move in both these candles during the last week. All those points we discussed during our daily analysis videos. Remember, daily analysis is not a detailed analysis. It is only continuation to this weekly analysis we are doing. Okay, now daily demand zone we have drawn here. In case this demand zone is violated, the next daily demand zone will be activated. What is the next daily? It is a high liquidity fresh zone, and when it was formed on 17th November, 6 base candles it is having. This is the one. This is candle. This is a drop candle with hidden body. 1, 2, 3, 4, 5, 6 candles institutions have created here. But some mistake here. Why weekly zone is pierced? Something wrong. We missed something. Let me go to the weekly time frame first. So I have to draw weekly zone till this candle. So I have selected this. Okay. Sorry for the mistake. Now let us go to the daily time frame. So that means the weekly digital line and daily digital line are exactly same in this zone. In case if daily zone is violated, that indicates weekly zone is also violated. Definitely there could be some traps institutions will set below this. We call them as, because this is a demand zone, we call them as bear traps. Okay, here this is the daily zones we have drawn. And I'm not going below this. The reason is, if once their prices reach near, we will identify. Time being, this is good enough for this coming week. And what about the supply zone? We have a immediate supply zone and daily time frame. And it is 6th 3 and 11/3. 631 base candle leg-in. This is the one, 6th March. This is inside the weekly zone. So let me change the color to daily supply zone. This is a normal zone, not high liquidity zone. So daily supply zone. I am not adding the keyword HLQ here. Generally what we should expect a movement from this zone up to here, up to this daily supply zone. But this daily supply zone could be a, LOTL zone to high liquidity zone, because we have seen last week we have an high liquidity zone here. So let us focus on that high liquidity zone. I am not drawing the other because they are all LOTL zones. Because that is what happens. High liquidity zone again and again creates. See, all these are all overlapped zones. This is a high liquidity, this is a high liquidity, both are overlapped. So what is the main horizon? This is the one, 27/12, 23. From here order flow is starting. If I add all these zones, it might be looking very clumsy. So what I do, just add the main route. This is the one reason behind creation of all these zones. See the levels, 48, 600, 48, 44. This is 48,002. See, all very, and this is 48,222 inside this only. All these are all LOTL zones. So many LOTL zones created. That's why order flow in this supply is very, very strong. Not easy to break. It takes some time for institutions to break this high liquidity supply zone. So let me draw this high liquidity supply zone, which is the main route behind all these supplies. So when it is created on 27/12, 3 base candles. This is the one, 27/12, 3 base candles and a drop. See here, new zones, rally base drop, again rally base drop, again rally base drop. Institutions again and again and again they are creating new supply zones within this high liquidity zone. This is a daily high liquidity supply zone. If you observe, each time prices are entering here and again entering into this zone. See, again they entered. Every time enters, institutions creating new zones. Exactly in this area, They are not letting the prices go. And even this daily supply zone is having a strong order flow. The reason is, see the wick here. They created a leg out. They try to capture the order from the zone and see the rejection, huge rejection. After this rejection, see the move, big move down towards the daily zone. Those who would have taken a trade here, they would have captured this entire move. So many points during the last week. I mean, during last 2 weeks, not last week, last 2 weeks. Okay, this is at present, Nifty reached the daily zone and again prices are moving up towards the supply zone. And remember, this daily demand zone is inside monthly zone. That is one point you should understand. And in weekly, see here, why this demand zone is so strong during this week? This is a normal daily demand zone inside the monthly zone, not having weekly zone confluence, only monthly zone, but still it is very strong last week because this zone is having weekly EMA confluence. Now I am at the weekly time frame now. This daily zone is having weekly EMA confluence. This is the reason why during this completed week, Bank Nifty holded the prices even though the supply was very strong. Last week supply is very strong. Institutions spread their supply until this monthly zone. Even below this weekly supply zone, there are so many high liquidity zones at lower time frames like 75 minutes, 25 minutes, 15 minutes. There was so much of high liquidity supply zones. Still, this demand zone holded the prices during last week. The main reason is it is having weekly confluence. This daily demand zone is having weekly confluence, weekly EMA confluence. This daily demand zone is having weekly EMA confluence. That's why institutions created strong order flow inside. We identified those strong order flows during this completed week by using the concept you learned in lesson 16, that is zone confluence. That point you should not forget. In zone confluence, I explained you a technique, fine-tuning the zone, how to fine-tune and identify the order flows. We have identified 2 fine-tuned zones, 5-minute zones inside. And they gave us over 600 points. Each time the fine-tuned zone, prices entered into the fine-tuned zone. Okay, now let's move again, go back to the daily. So I am not drawing any other zones because they are all part of this zone confluence. Only the recent zone I have drawn, daily supply zone, which is part of high liquidity supply zone, zone confluence. I mean, it's not zone confluence, sorry for my mistake. It is LOTL, level on the top of the level. If 2 zones overlap with each other on the same time frame, that is called LOTL. We learned in phase 1 training program. Zone confluence means different time frames. If zones overlapped, but they belongs to different time frames, that is zone confluence. Here daily demand zone, this is also a daily high liquidity demand zone, so it's a LOTL concept. All these LOTL zones created, but we are not drawing them. Now up to this, hope you got the clarity. Now we have completed monthly, weekly and daily. From this at least you can understand what could be the range during this coming week. Probably prices may go up to this daily supply zone again. And from there again they may turn. That possibility is there. Because here this zone is already tested several times. If there is no fine-tuned zone inside, probably in the coming week, this might be violated and may come down up to the next demand zone, inside weekly zone. That possibility is also there. But remember, if this daily demand zone is violated, trend will be changed. Currently, which trend Nifty is having? We are at Nifty time frame. Daily trend is sideways, but weekly trend is uptrend. So daily trend will be changed to downtrend. If daily trend is changed to the downtrend, the next time frame, that is 75 minutes time frame, trend will become a downtrend. That means your short-term trades supports only short trades. They does not support the long trades unless you go for counter trend trading related concepts. Okay, time being, this is the approach you should understand. Now let's move on to next time frame, 125 minutes. Because some people suggested me skip to directly 75 minutes. We should not do that, because from 125 minutes onwards, high liquidity zones plays the major role. Because we are doing this analysis not only to identify the zones, but also identify the strong support and resistance levels based on our supply demand zones. High liquidity zones will act as a strong support and resistance for Bank Nifty's movement. There you will get the trade opportunities. So that's why we have to analyze all the time frames below daily. Now from now onwards, let us focus mainly on high liquidity zones. So I am going back and changing the time frame to 125 minutes. Let me generate the chain. Meanwhile, what is the time frame? Okay, I already changed here. Okay, chain is ready. Now let us go to what is the most nearest demand zone and supply zone. This is the most nearest. This is a high liquidity demand zone. Previously what we did, we have written several high liquidity zones and drawn. Now I am not going to do that. The reason is now we are doing everyday analysis, continuation to this video. If anything wrong happens to this zone, immediately the next week analysis videos, I will change the levels. But previously I was releasing only one video during the week. That's why we have written all these multiple levels. Now let us limit our analysis to the recent high liquidity zones. So fourth one, this is the most nearest zone. When it is created on 25th January 9:15, one base candle. 25th January. Okay, 25th January 9:15. This is the one rally. This is the rally candle. How many base candles? 1325. 9:15 and 1325. Something wrong here. We are at 125 minutes time frame. Okay. This is the demand zone. 25th 9:15. I am seeing 1 or 2. Sorry for my mistake. I am seeing at yeah, correct only. 25th January. Yeah, 25th January. I was seeing in 24th earlier. Sorry for my mistake. 25th. This is the 25th January. The biggest problem with trading is unless you zoom very close, it is really giving a lot of confusion, showing the dates in a wrong way. So this is 125 minutes demand zone, high liquidity demand zone. That point we should not forget. This is only the nearest high liquidity demand zone. In case if this daily demand zone is violated, probably the next support will be at this level. It may not immediately let prices enter into this daily zone and weekly zone and the daily zone. So sometimes we get support. It is already tested. Definitely high liquidity, it may support multiple times unless the order flow is very strong inside. How do you identify the order flow inside? Fine tuning. Go below the time frames and fine tune. Okay, next this is high liquidity demand zone, and next we will see high liquidity supply zone. This is the one. We have 7.3, 9.15. This is 7.3, 9.15, two base candles. Is it two base candles? Yes, two base candles and a drop candle. So let us draw the zone. So this daily supply zone is having zone confluence with high liquid. Is it high liquidity? Yes, this is high liquidity. This is high liquidity supply zone. This is a counter trend trade setup. That's why see the prices came huge rejection. That is what happened in counter trend trade setup. The moment the zone is confirmed as a counter trend trade setup high liquidity zone, prices go and see the rejection. This was a good trade for those people who planned based on the counter trend trade setup. This is 75 minutes high liquidity supply zone. I mean 125 minutes, not 75. See how the ranges are narrowed down now. Probably this could be the immediate support level at 125 minutes level. The levels will come down once you go to lower time frames. Now let's move on to 75 minutes time frame. I'm changing the time frame to 75 minutes, generating the chain. This is 75 minutes supply demand zone chain. First here let me change the time frame also 75 minutes. Okay, what is the nearest demand zone? Seventh one. This is the nearest demand zone, and moreover this is the nearest demand zone to the current price, and moreover this is a high liquidity zone. So let's mark this, and below one more high liquidity that we will see next in the coming day, in the this coming days of this week, when it is created recently. 23 11:45 and 21:3 9:15. Two base candles. So 20 March 11:45. This is the leg candle, and these two are the base candles. Already this zone is tested from here, and this is a high liquidity for 75 minutes high liquidity demand zone. See what happened. Friday prices entered into the zone, and then after that a move. The last trading day, this zone has given a very good trade opportunity. So excellent. This is demand zone. So what is the immediate high liquidity supply zone? Now we are focusing only high liquidity zone, the third one. Already tested 6 times. 12 rejections from this zone. This is the 29, 12, 14, 15, 4 base candles. $29, $12. Okay, this is the one. 29. This is 27. 29, 14, 15. Yeah, this is the one. Rally, 4 base candles and drop. So inside the daily, it is having zone confluence. This is 75 minutes supply zone. High liquidity supply zone. This is only the nearest supply zone. High liquidity supply zone. But observe here, before that we have 125 minutes high liquidity supply zone in this newly created daily supply zone. So that's why identifying both time frames are very, very important. If I would have directly gone to 75 minutes by skipping 125 minutes, we would have missed this high liquidity zone. And we will be assuming we have to wait until prices come here. Sometimes what happens? Prices come here, reach, and it will come down. We will be wondering why prices did not come up to this level. Because some of the members, they gave me suggestions, concentrate to only few levels so that I can save video time. Here, saving video time is not important. Doing complete analysis and finding the right levels is very important. Because we are not doing this analysis to save the time. We are doing this analysis to gain knowledge, that is for a beginner, learner's point of view, and for a trader's point of view to gain good money. Even one opportunity we miss because of our missing analysis, it's like a waste of our time. Whatever the analysis we are doing, the whole thing will be wasted. That's why we have to concentrate all levels, but we are giving importance to only high liquidity, the nearest high liquidity zones. Okay, hope you got the clarity. So if you would have skipped 125 minutes high liquidity supply zone, we would have missed it. Because 75 is not here. 75 is there little above. Okay, now let's go back to next time frame. If you want to draw any other levels, previous report you have all the zones are available. With that information, you can further draw the zones. Even normal zones you can draw. Don't limit to whatever I am drawing on the charts, because the software is showing you all the zones. I am changing to 25. I am generating the chain. Meanwhile, I will change the time frame to 25 here. Okay, so this is ready. See here, all the zones are visible to you. I am drawing only high liquidity, but you can still draw the other zones by making use of. What you need to do, just pause the video, just go through all these levels and mark these levels on your charts. That way you can plan. You need not go exactly as per my analysis. Hope you got the clarity. Okay, what is the immediate demand zone? This is the one, 8th one. This is moreover high liquidity demand zone, 25 minutes. When it is created, 20 is the leg in, 20 March is the leg in at 1440, one base candle, 1440. Yes, this is the one. We have a rally candle, one base candle, and we have a leg out with gap, pro gap. See, last week Nifty, Bank Nifty is within this pro gap area only. It picked up the orders, but it is from 75-minute zone. So this is a 25 minutes zone. "25 minutes high liquidity demand zone." We should not forget this point. Rally base, rally. This is the candle with hidden body. You see, if you would not have considered this hidden body, this candle looks like a base candle. That's why I explained in lesson 9. I think in lesson 9, the last 2 videos, I explained hidden bodies and hidden zones concepts clearly. If anybody did not listen, please go through those videos. Okay, here we have high liquidity demand zone, a fresh zone inside that 75 minutes high liquidity demand zone, and next we are looking for only high liquidity zones. So we have immediate high liquidity supply zone at 6th, then serial number 6. This is a high liquidity demand zone during already tested previous week. It is already tested once, 2 rejections. That means 2 times prices entered in this zone. 2 times it gave you trade opportunities. And when it was created? On 13th March, 10 o'clock 5 and 2 base candles. 13th March. Here, 13th March, 10 o'clock 5. $11.20 is the this is 11.20 leg out candle. So here we have supply zone. This is 25 minutes. I'm not getting into the other zones. The one above, in case if it breaks, which zone you need to take. The report is showing you. Please go through the report. That's why I'm telling you, I'm only drawing the immediate levels. Sometimes you may get a doubt. There is a higher chances it might violate. Suppose, if you feel like that. At 25 minutes, is there any other high liquidity zone above this? So go through this report, because I'm showing you the chain completely. The purpose of showing you this supply demand zone chain is you can draw the other levels. I'm currently focusing only recent levels for our Monday's trading point of view. Mondays means this Monday is a holiday, so Tuesday's trading point of view. You may ask, what about Wednesday, Thursday? Because anyway, Tuesday again I will be continuing another analysis video where we stopped here. From there we will continue. I am not doing detailed analysis on Tuesday's video. I just continue where we left today here. From there we will continue on Tuesday. Like that the whole week we repeat, and again during the next weekend we will again have a detailed analysis. This is how we will proceed. Because every week once you should see the detailed analysis. Because many things will happen at the higher time frame levels. So it's very important. Price over extensions, EMA confluence, or any other price action clues we need to observe at higher time frames. Okay, this is a 25 minutes. See here, now price movement between these two 25 minutes high liquidity demand zones. Let us assume if this 25 minutes high liquidity supply zone is violated, just above we have 125 minute zone is there. Immediately that will be acted. And moreover, it is having a zone confluence 25, rally, 2 base candles and a drop. You can fine tune both the zones. After that you can fine tune at 5 minutes level. Even more deep also, see here you have a rally, base candles, 2 base candles, drop candle. There is one more you can fine tune here. Please remember, fine tuning the zone should be done by you people. That is what you learned from lesson 16. Last week daily videos I explained fine tuning the zones in detail. Because every time it is not possible for me to explain again and again. You need to refer lesson 16 if you have any doubts. Okay, this is about 25 minutes. Now let's go back and change the time frame to 15 minutes and let us generate the chain. Before that, let me change the time frame here. Still it is processing. Generated, chain is ready. This is 15 minutes chain. See, when I am explaining the chain, please also keep an eye on this trend also, how trend is changing at different time frames, because the trend plays a very major important role for you. Of course, high liquidity zones doesn't care the trend much, but there are times high liquidity zones also will be violated. You should not forget that point. The main reason could be trend. It may resist sometime against the trend. And after that, their lifetime will over. After that, price will be moving according to the trend only. Okay, what is the nearest demand zone? The nearest demand zone is 8th, is a high liquidity demand zone. Even immediate supply zone is also high liquidity. That's a very good sign for us. It is a positive. We have 2 immediate zones, high liquidity zones. And when this is created on 23, 14, 15, 4 base candles. 14, 15, 1, 2, 3, 4 base candles. So 25 minutes now, distal line is extended. Let me adjust to 15 minutes level. Now instead of that, let me change it, just add the text 25 minutes / 15. That means same zone is supporting 25 minutes and also 15 minutes. The only thing is 25 minutes distal line is a little higher, but here little lower. We just extended, because 15 minutes always the most recent zone you have to give importance, the distal lines and proximal lines, because order flow will be always based on the most lowest time frame. The fine-tuned, always remember, fine-tuned is the main important concept. Fine-tuned is lower time frame zones, you have the real order flows. If that fine-tuned area is a high liquidity zone, you have higher success rate. Multiple times the same zone will give you trade opportunities. That's why we are focusing on high liquidity zones. Okay, this is a immediate demand zone. Maybe Monday you get support from this zone if prices reaches, but before that the entire pro gap area has to be completed. See, still pro gap is enabled from here to here, this low. This is the range of the pro gap. Let me draw horizontal lines. The current active, this is the one here, and this is the one here. Because from this close only, see with the gap. So far, earlier pro gap is up to here. Now this is filled. This much is filled. Now, till the bottom blue color line, the orders should be filled. All these are all pro gap order flow. But within this pro gap, do you want to take a trade? That all depending on your risk management. You can take, if you go for cash trades, by doing position sizing. I clearly explained position sizing concepts in lesson 19. If you are an experienced person, please go through that position sizing video, because many experienced people, they are making mistakes regarding the usage of the capital they applied for the pro gap. Maybe you want to plan 1 lakh rupees you want to invest. After position sizing, it has suggested you to buy only 30,000 worth stocks. Many people are what they are doing, They are taking the 30, they are investing the 30,000 worth and releasing the 70,000 and investing the 70,000 in some other stocks. Don't do that. I clearly explained why you should not do. If you are doing this mistake, that is a big blunder. So please listen that video. Position sizing video not only explained for learner's point of view, I also explained that video for experienced people point of view also. Okay, so by doing position sizing, you may take entry in this pro gap area. That is possible. So I am deleting these blue colors. Okay. Now this is the 15 minutes demand zone. Now what about supply zone? 15 minutes supply zone, the 7th one. The serial number 7th in this. This is the one. This is a high liquidity zone. Already it gave you trade opportunities during last week probably. So when it is created on 23/11/45, 4 base candles. (23/11/45). This is 14th. Oops, testing my patience. This is 21st. Then where is 20? What is that I am watching? Sorry for my mistake. Again, I am making the same mistake. I referred it wrong. 23/11/45 is the already we have drawn. This is the one. Not this. I think we have drawn this is the one we have drawn. I think I went one level below and drawn. Sorry for my mistake. Actually, I am supposed to draw this zone anyway. Fine. We have drawn this one. Actually, 9th one I have drawn, not the 8th one. So let's draw. This is the 8th one is the most recent demand zone, not the 9th one. So last week prices didn't enter into this zone. It is a still fresh zone. So 23/11/40, 23/14/15, 23/14/15, having 4 base candles. Oops. This is the one I drawn, right? Then what is the... Sorry guys, something happened to me. This is the one we drawn. Maybe something wrong happened to me. I'm sorry. Okay, 7th one we need to focus. This is the one we got the opposite. This is 13/3. This is the 13/3, 10/15 candle. This is 14. Okay, 14, 13, 3, 10, 15. 13, 3, 10, 15. Yeah, this is the one. Inside 25 minutes. 13, 3, 10, 15. 1, 2, 3, 4. These are the base candles. So we are supposed to draw a zone like this. This is the high of the candle, or this one is high. What is the high here? 47341. This is 47346. So this is the highest. Okay. And this is 15 minutes high liquidity supply zone. This is the immediate one available. Last week once prices entered into the zone and then came down, and after that price did not reach this level. So this is only the immediate level. The top one is 15. See here, the problem with these labels is sometimes see both the labels are showing. It looks like this dark color one is 25 minutes and 15 minutes. Actually this 25 minutes is the one above. This is the problem with the labels, so don't get confusion. Okay, and this is about 15 minutes, and the last time frame, let's move on to 5 minutes time frame. Changing the time frame to 5 minutes. Let me generate the chain. Meanwhile, I'll change the time frame here. Okay, chain is ready. What is the most recent available demand zone here? 14th one is the most recent. It is already tested. But below we have a 15th, which is a fresh zone. Let us draw both the zones for 5 minutes level. Because you should know, if one of these zones violated on next your trading session, what is the next high liquidity zone? At least 5 minutes level you should know. So we are going to draw both these levels. The first one is 23. It is created at 15:15. Same mistake I am doing. The first one is 14th. This is a 23, 12 o'clock 5 minutes. The most recent one. This is a 21-3, 12 o'clock 05. So this is the drop candle, base candle and rally. This is the zone. This is demand zone. But is it pierced? This is just pierced. See here. Pierced zones we should ignore because it's already pierced. So let's don't focus on the pierced zones. Just pierced. It was within the stop loss, but gave a move. Last week, whoever taken a trade in this zone, definitely you got profit, good profit here. But just pierced within your stop buffers. Because I am providing you stop buffers every week through our daily other reports videos. So we will be within the stop buffer area. But I am deleting this zone because it is just pierced. Once it is pierced, we don't consider that zone. Pierced zones will be used for special purpose. Forget about that special purpose for time being. So what is the immediately available? 15th one, which is not pierced and a fresh zone. This is on 20 March 15:15, two base candles. This is the one, 20 March 15:15, two base candles. This is 15 minutes, high liquidity. Not 15 minutes, I'm sorry, this is 5 minutes. 5 minutes, high liquidity demand zone. If prices come probably on Monday in this area, you can plan a trade in this 5 minutes high liquidity demand zone. I mean Tuesday. Monday is a holiday. one more also we need to identify. What is the next high liquidity demand zone? This is not pierced. This is on 14th February, 14 hours. Even below here. Somewhere here we have high liquidity zone, 5 minutes. February, exactly 14 hours. But actually how to draw like this. Fourteen to 14 hours. Why software consider this? It considered as a ERC, failed ERC candle, because the range is a little higher, but I'm not convinced with that fully. So consider both these candles as a part of zone, and this is the leg candle and this is the rally candle. So that stop loss will be moving a little low. So we won't get piercing issues now. Got it? Okay. So below this is there. That means if this daily demand zone is violated, below we have 5 minutes high liquidity zone. So these are the two 5 minutes high liquidity zones from our list immediately. Similarly, we'll identify two high liquidity supply zones that are available immediately. We have 14th and 15th, but 14th is pierced. Oh, sorry, this is demand zone. Again, I'm making same mistake. 13th is the immediately available high liquidity supply zone. So 14th February 2024 at 1 o'clock, 5 minutes. After that, 5 base candles. This is the immediately available 5 minute supply zone. 14.3, 13.5. So somewhere in this area. Yeah, 14.3, 35, 1, 2, 3, 4, 5. It considers this candle is also, maybe it is not good enough for it. The reason is this is supply zone. 5 minutes high liquidity supply zone. So just picked up the orders from here. It gave a trade when? Last week. Last week on Thursday, you got a trade from here and gave a good move from this zone. And last Friday came very close. If anybody would have added some buffer before entry, a buffer before the entry, maybe your trade would have been triggered, and after that again it gave good move. But this is the last 45 minutes trade. Generally intraday traders close their positions during last, but if anybody, some people, they take them as an opportunities. With their cash trades, probably they take the trades without margins. Okay, anyway, this is the 5 minutes high liquidity supply zone. immediately available in case if it violates. Above we have 15 minutes and 25 minute zones are overlapped zones. But 5 minutes, what is the immediate next one? Let us see. At 11th, we have already tested 4 times, 6 rejections from this zone. This is on 13.3, 11.10, 2 base candles. 13.3 at 11.10. Here, somewhere here. This is 11.5, this is 11.10. 13.3, 11.10, 2 base candles. Here also it is not, took it as a leg candle. The reason is, this is a normal leg candle, that is how software, because range is not good enough. Here big range is there. That's why it is considered as a large candle. Maybe the software consider this as a ERC candle. That's why combine both. Software consider this as a medium size leg candle. And a medium size leg candle can be part of the base if there is earlier a base candle. See, earlier there is a base candle. And this is also a medium size leg candle. So leg in it is qualified. But this is not qualified as a leg out. Because it is not qualified as a leg out, this is the zone we would have drawn. This is 5 minutes. High liquidity zone. High liquidity supply zone. See what happened today? Today means on last week, on Thursday at 11:40, prices entered and gave a very good. Those who missed this, again another opportunity they got here. And how prices came down, further went down. Actually, Thursday, if you would have taken at 11:40, you would have captured this big move till Friday. The entire move is continued from here. In between, institutions created another high liquidity and further pushed. And after that, prices haven't reached up to here. Yeah, once it reached, it gave. This is on Thursday. So this is about our supply demand zone chain. Now for our next, that is Tuesday's trade plan. What could be the Tuesday's? The immediate high liquidity demand zone could be the range. This will be, let me use info line so that we understand the ranges. This could be the immediate range, but we have a pro gap area is there. That's why it may pick the orders from pro gap. This could be one range. If this is violated, the range could be like this. These levels. This is for Tuesday's point of view. Okay. I'm just adjusting the coordinates. This could be for your Tuesday's trading. Either this one or this one you can consider Tuesday. And suppose if this is violated, then what will happen? The range could be within this zone. If there is any fine-tuned area below this, any fine-tuned, please check. Last week we did that analysis. Follow exactly the same. Then the range will be like this. If there is a fine-tune within this area. Anyway, we are discussing only Tuesday's point of view. Based on Tuesday's price action, we will I will explain what could be the Wednesday's ranges we will generate. Next week we will be generating only 5 minutes and 15 minutes maximum, unless major changes happens on other time frames. Mostly prices will be moving within these ranges only. Why I am saying within these ranges? Here we have a monthly zone, inside we have a daily zone, and also we have a high liquidity supply zone. This is inside the high liquidity supply zone, these ranges are there. So here high liquidity daily supply zone is starting from here. Go to the daily time frame, you will get clarity. Now let's expand this. Now you will get clarity. See, daily demand zone to daily supply zone point of view. You look into these ranges, you will get clarity. This is a weekly supply zone. Sorry, this is a weekly supply zone. Inside weekly, this is daily. And this is a monthly demand zone. Inside the monthly, this is the daily zone. Now currently all these high liquidity levels are within the weekly area. Daily zone is here. This rally based drop is also a daily zone, LOTL zone. Now you look into this diagram, you will get clarity. Where is daily EMA confluence? Don't look for daily EMA confluence. The reason is daily data is moving in a narrow range here. Look into the EMA also. EMA should not be used in ranging. It is looking like in a ranging movement, price movement. So don't use a daily EMA here. It won't get much importance. But weekly you will get. See here. This high liquidity zone is having weekly EMA confluence. This 75 minute zone. This is a 5 minutes high liquidity zone, 25 minutes, 15 minutes high liquidity zone. Probably, definitely, a strong support will be there if prices comes here. And what about monthly? Monthly is having EMA confluence with this weekly demand zone. There is a weekly demand zone here. Inside monthly. This is the monthly. Inside monthly we have a weekly. Definitely within this weekly some high liquidity zones will be there, but we didn't drawn them because prices are too far from here. Okay, hope you got the clarity about the ranges for our next week. So focus on these ranges now. And okay, I forgot to tell you how much range this one, first one. This is 867 points range. And in case if this one is violates, prices moves above, and here we have 1200 points range. And this one is a 1798 points range. Most probably you can expect Nifty's range between one of these ranges during this coming week. And moreover, this week we have only 3 trading days. You have Tuesday, Wednesday and Thursday. Monday and Friday are holidays. So within these 3 days you can't expect much from Nifty. Because it is a short week, we should also try to understand what could be the movement within the Nifty. I mean Nifty means what I mean to say Bank Nifty. So this is about the analysis and their ranges as per Neo Stock Software supply demand zone chain. Hope this information will be useful to you for your learning purpose, for the traders, for your trade plans on the coming week point of view. So let us all meet again in our next video. Thank you.